April 18, 2019, 13 market moves daily analysis. Guys, this is where things get finally a little bit exciting. This is the top observations from April 17th. Number one, divergence observed. As you probably heard all over the news yesterday, we're talking about Chinese data is improving. The economy in China is finally improving. So what do we have? Well, typically Chinese stocks would rocket higher. Indeed. But what do we have? We get absolutely no reaction. We're going to take a closer look in just a sec. Number two, money continues running out of healthcare sectors. But the question is, where is it going? Because we're showing signs that it's not going into growth stocks like what we were initially calculated, or at least not yet. Basically, it appears that money is staying on the sidelines. If money is staying on the sidelines, then it's going to be very tough for the market to move higher from here. Number three, bears do finally take over in Netflix, and we're observing the 11 type behavior. It looks like that behavior is prevailing, and more on that shortly. Number four, trades for today. Snap-on Tools, SNA, Granger, GWW, and ISRG. First, let's take a look at specifically what's going on with the Chinese sector. Let's take a look at Baidu. Baidu, here's the daily chart. We've been talking a lot about the move 11 and 6 and the 2, which all show signs of topping behavior in the markets. What we're observing here in the history of the chart of Baidu is a situation right now that highly resembles this move 11. When you think about move 11, think about a pyramid. This is exactly what we're getting right here. And this pyramid, it sits right here on this 50-day moving line. And the last thing that we had yesterday was this black candle. Now, this is not a bearish reversal black candle, but considering that it happens right after this pyramid, we're likely to have a move lower. Now, surprisingly, Baidu, on all the great economic news from China, doesn't move. There's no reaction. It's up plus 5 cents for the day. Now, notice last time we had this pyramid in Baidu formation, which also followed by this black candle, not bearish, not bullish. It's identical time frame on this chart. And look what happened next. Let's take a look at a weekly chart of Baidu. After multi-top formations finally drops, look what is forming right here, guys. And we are right here right now. So it appears that there is a high probability that the death cross will be formed. In most of the cases with the death cross, stock will ultimately fall lower from here. NTS is another Chinese name. Chart looks quite different from Baidu, but what do we have here? Multi-top observation of reversal on this top level right here where the stock is trading from 265 to 280. It looks like a lot more people are coming in and taking profit. Now, I know this actually looks kind of bullish, especially, hey, look at the RSI. Boom, looks like they've been buying like crazy. But that's not what MACD is showing us, guys. That's not what accumulation distribution is showing us. And we're to take a look at the longer time frame, NTES. Remember, it used to be at $370, $350 stock, guys. Remember, some of you have been subscribing to me for some time. We used to short it right here, actually, right here. This was the time where we used to short this thing. Now, it's back to these high levels, 280 to 60, and if we're to draw a line, it's still in this huge downtrend. And notice again, what is likely to form here is a death cross, so the probability it is going to move lower as well. And the one that actually looks better on the chart is BABA, but if the entire Chinese sector moves lower, then clearly this one will move lower. We do have divergences on the RSI here. We do have a multi-top formation, maybe not quite. I mean, maybe before the huge moves bigger, we could ultimately maybe move a few points higher. This is the only stock that has actually attempted to move higher after a few bearish moves lower. And so, to me, we keep adding this BABA position here because ultimately we think it will resolve in a sharp move lower. This is how it looks right here on the daily, up $1.77. You'd think a stock like this would move $5 on a day like today, $6, $7. No. And what do we have? A bearish, it's kind of a neutral black candle right here. You know, oftentimes if you observe the history of these candles in this stock, we do get a pop lower, not higher. So very interesting right here that even though the news are good, nobody's buying the good news from China. To me, it's a case of divergence. So clearly in this daily chart, these RSI divergences keep developing. Every time this thing tries to move higher, the strength of the stock actually drops, confirmed by the increased volume on the sell days and decreased volume on the days of purchases. Now, here's why we're saying there's no signs of money going into the growth stocks. Let's take a look at Amazon. You would think, as positive as the markets have been lately, they'd be buying the heck out of Amazon. But that's not what we're seeing, guys. This right here, if you use your imagination, this is a pyramid. Look, in longer time frame, not longer time frame, in this particular case, I'm looking at a 2-day, 2-minute chart. It's head and shoulders. So this is the head, this is first shoulder, the head formation, another shoulder. Most of the time, this is a pretty accurate indication that the stock will drop from there. Again, Baidu, what do we see? Shoulder, head, shoulder. You can consider this as a move 11 formation to see the pyramid. Guys, if you see the pyramid, it's the sign of a top. Netflix, quick move 13, moves higher. Pyramid created, another small pyramid right here. The other shoulder, it's set up for a drop. Now, the fact that after the earnings report, the stock could have dropped and it didn't, that's what caused us to believe that maybe the institutions that were taking money out of healthcare, they'll put it to use here, but they're not. And clearly some people were putting money in it because it had a pretty strong move all the way to 375. Then it had another pretty strong move to 365. Ultimately, the bears prevailed in this one. The importance is this topping formation. In other words, they could have put the money to use yesterday. They could have moved the stock substantially higher, but they did not. So if this is an example that could be projected to other stocks, other FANG stocks moving forward, the fact that the banks are taking the money out of the healthcare stocks does not necessarily mean that they're utilizing them into the growth stocks. And if that's the case, then if we don't get a move higher in the technology sector, the market is not moving higher. I mean, that's just basic stuff. So Facebook, same thing. Shoulder, head, shoulder, predictive of a move lower. Again, what do we have? A resemblance of a pyramid. NVIDIA, another pyramid. Shoulder, head, shoulder, indicative of a move lower. Tesla, oh boy, don't even get me started on this one. Guys, yes, it's all over the board, but look, one top, two top, three tops. The strategy has not changed in Tesla. We remain bearish. As a matter of fact, last night after hours, I'm not sure if you were paying attention, some of the bullish funds in the last quarter have completely closed out their position. There's one big hedge fund that closed out 92% of their position in Tesla. So expect a drop today, even though pre-market it's kind of trading just a bit lower, no big deal, like a couple of bucks lower to sideways. But I think today we will get a pretty good move in Tesla. Again, the strategy when a bearish chart bounces higher, short it at the top range and close it out when it moves lower. Okay, let's take a look specifically at what trades we're actually paying attention to. If you take a closer look, the ones that have the exclamation points, guys, those are the ones that we typically consider in trade. So you've got GWW, ISRG, and Snap-on. We're also paying attention to the other ones. We're going to describe these top three right now. So this is SNA, Snap-on Tools pre-market. It's actually up at the moment I'm recording this on very tiny volume, 287 shares of volume. That's it. I mean, not 28,000 guys, not 2,800, just 287 shares. Now, it's still a bit early in the morning, so the volume probably going to move higher. But still, that is an indication that we don't have a ton of people really liking the idea of jumping in here. But the stock did move higher to a level of 162.50. So ideally, we want to see it move just a bit higher. Ideally, when the market opens, if it trades at 165, I am in buying puts in this name. Here's why. Here's the daily chart. Look at this level of 165, right? Look at this level of 162. I mean, this is exactly what's trading right now, 162.50. So last time I got to this level, just above this orange line, okay, what happened? It dropped. Last time again, it got to this level. Black candle formation, reversal black candle, what happened? It drops. So ideally, if it moves to this level, 162.50, that's where it opens, or maybe a little bit higher, 165, on continuing low volume, that would be a good level to come in and buy some puts. Diminishing strength in the stock, you got negative MACD. The only thing, right, is they actually have been buying, clearly buying the stock in the expectation of earnings. You had a couple of bullish reversal candles here. That is fine, because a lot of times, if you take a closer look, many stocks that do run up into the earnings, they have actually a high probability of a sell-off. Let's take a look at the weekly chart. As you can see, this level is a pretty solid level, right? This level about 165. If it gets there, it makes for a higher probability trade to buy puts here rather than calls. Multi-top formation on longer time frame. I mean, this level, the stock has been struggling with this level for a very long time. So the probability is, if we short it at 165, it gets back to this 154 level by the end of the day. That would be the time to come in and lock some profit. So we're looking for a move of about $10 to the downside if this thing opens at 165. Grainger. Now this one, even though it was posted to report earnings this morning, I don't see the earnings announcement yet. So we're going to keep an eye on that. At least at the time I'm recording this, it's not out yet. However, clearly distinguished triple multi-top formation right here on Grainger. Continuous sell-side volume increases, while the times when the stock moving higher, the volume higher is neutral. So triple top, the stock is trading right now under the 200-day line. I mean, I like the setup, especially we'll take a closer look at the weekly chart. Very, very well-defined top right here. And if you take a look at the weekly, right, we're actually under the 50-day moving line here. Decreasing strength in the stock. There's a lot of good things here that we see that would be in favor of actually shorting the stock. Now, initially, Grainger, studying the history of the earnings report, it does like to move higher. So after the earnings report comes out, I would like to see the same move higher, maybe from 308 level all the way to 325, and then that would be a good level to pull the trigger in the expectation that by next week this thing could actually drop all the way to 280. ISRG, this one actually going to report earnings after the hours, guys. But the top information that we've been talking about, the example I keep bringing up about Humana and UNH back from October, the top information is identical. The top information that we have discussed in the last couple of videos, and the examples of the cloud stock, the Workday, the CRM, Splunk, they all have the same chart. Now this one is Intuitive Surgical, and actually traded, if we take a look at the daily chart, very much just like the healthcare sector. And this is actually a medical device company. So what do we see? Decrease in the strength as the stock tries to hit all-time highs is about 600. Now for those of you who may not know, this stock, if it didn't do a stock split about a year ago, would have been trading right now at the level about $1,700. Back in the days, I mean, I remember when this stock used to trade at $60, $28. So it has appreciated crazy. The only other stock probably we can compare it to this one would be like Netflix. So many people don't realize that this stock have been on a long, long run. And I think this run is over for ISRG, at least short-term wise. So what can we expect? Well, looking at this weekly chart, we need to see this thing trading back to maybe 475 level over the course of the next 30 days. Currently, it's at 525. The MACD is ready to make this bearish crossover. Higher volume on the sell side. So let's take a look closer at the daily chart. Whoa, you may say, whoa, this looks like UNH. That's exactly the point, guys. So some of these medical device companies, okay, they've been resembling the move in the healthcare sectors. You can see huge volume, right? MACD already crossed here. There is an easy strategy that we have discussed in the last couple of videos, right? Short any bounce. Remember the UNH trade? Overall, the chart looked bearish, just like it looks bearish right now on the ISRG. So the trade would be, if it bounces after earnings, despite your screen looking green, you want to come in and you want to buy puts in this name on the bounce. Okay, let's talk about today's market move for April 17th is actually market move 2 with clear behavior of a pyramid, which would be a move 11. So we locked it in as a move 2 with the behavior of an 11. This is how move 2 looks, guys. Here it is. We got a nice move pre-market, opening significantly higher, actually hitting the high at 29, 23 and a half, and then sharply sell-off. Notable, of course, is the sell-off did take place on increased volume in relation to when the stock, when the market tried to bounce higher intraday, and very notably, the accumulation distribution just, it didn't move one bit when the market tried to move higher intraday. It just continued sideways and it finished at the lows. So we have a strong confirmation like this on the accumulation distribution combined with the move 2 and a pyramid formation. That makes it for a pretty solid bearish move, but it also indicates that further bearish moves are likely. Two-day sequence is 6-2. We haven't seen this in a while. Look, I got 2 red numbers here, guys. We have not seen this in a while. 6-2 combination. This is how it looks in the chart. What I wanted to bring to your attention is look at this red line and how quickly things were unwinded here in a move 6 going to the latter part of the day. Literally last half an hour. Look at this red line right here. The importance is we have seen some of these sell-offs coming in second halves of the day, but we've not had a substantial sell-off right at the open. The volume is increasing, and the volume is increasing again going into the latter part of the day. So this move, the last part of the move from S&P moving 2906 to 2900 rather rapidly, that move took place literally when the last 10 minutes of the trading session. So it's, again, we're seeing the behavior here at the end of the trading session, just like we've seen the behavior in the prior session. And we have now markets doing this in the morning. The only thing we're missing is market making a big move lower intraday. So we've got sellers are coming in, guys. 6-2 combination in this particular case, very likely to lead to another bearish move or another topping formation. 5-day sequence, 5, 7, 12, 6-2. As you can see, we had a sequence of these bullish moves, and now we're turning into a sequence of bearish moves. Here's how it looks on a 5-day, 15-minute chart. It looks like these sell-offs are becoming more pronounced. And the VIX review, yes, it is clearly numerically low, and it's moving sideways. It appears like it's moving sideways, but finally, it looks like we got a move 13 on the VIX, which would be a clear signal of a bottom. VIX have been dropping non-stop for months, and I think we finally got a signal of a VIX bottom, which would be a signal that VIX could be moving higher for multiple days in a row. Let's take a look at the picture here. So there it is. VIX actually pre-market hit a low of 11, and look how quickly it bounced. When it bounced, it actually shot up all the way above 13 and didn't close very far off 13, 12, 6. It's a very nice move, very nice bullish reversal on the VIX is what we have observed. And this is how it looked on the 1-day, 1-minute chart. So sharp move lower to 11, sharp spike higher. That is definitely characteristic of a move 13. When something continuously drops, it makes that final day of a drop where it hits this ridiculous levels and then bounces sharply immediately. That is a move 13, guys. Next market move, 75% probability of the 3 as in 6-2-3 sequence, or we could see another top information like an 11. So in other words, the market is either going to gap down and continue down today, or the market could actually form another attempt at moving higher, create another pyramid like in a move 11, and then sell off later in the day. Here are the key takeaways. Institutional money is staying on the sidelines, which does not equate to a breakout higher in the markets. Move 11 behavior observed in many stocks. 2 bearish market moves in a row. Watch for a level of 2690 in S&P 500. If it breaks, we're headed much lower next week. Guys, I wish everyone a great trading day. Make it happen. If not yet taken Trade Like a Rockstar course, click the link below. Take advantage of it. It's going to be a long weekend. You'll have plenty of time to study the information. Get ready for some real action if we see S&P break 2690. I'll talk to you guys in the next video.